Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear, Coach Jay. Happy New Year. First real trading day of the year. Hope everybody did well. How was your day, Coach?
Turned out to be a pretty good day. Happy New Year. First full week of trading of 2026. Turned out to be a pretty good day. How was yours, Coach?
Pretty stagnant. I only made a couple trades, basically scratched the day. I missed the buy early. Just didn't set up for me. How about you?
Got long gold last night. We'll go a little bit more in depth into that trade. And then outside of that, it was, a couple scalps here and there, but trying to stay out of trouble when the markets got very range bound towards the middle of the day. So most of my trades were made in the overnight session, but did take a couple of scalps here in the New York session, but turned out to be a pretty good day. Let us know how you did in the chat, and welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before. We believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. Been here at Topstep since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some knowledge, and hopefully help you become a better trader.
Awesome stuff. You are all our audience. Thank you for joining us each and every day that you do. Let us know how you did to start the week. Were you up on the week, down on the week, anything that you learned from the week? And we'll get into the markets. Let's take a look at the news first. We do have NVIDIA CEO Jensen speaking at CES right now. So I'm sure there's going to be a ton of AI headlines that come out of that. But as far as news goes, it was pretty quiet. You had a US ISM manufacturing PMI coming at 47.9. Forecast was 48.4. Most of the heavier data this week is later. We got S&P Services PMI number out tomorrow. But later in the week, we have all the jobs numbers, right? We have JOLTS, we have ADP. We're going to get non-farm later this week, jobless claims. So this week is about jobs, but later this week, right? Early on, pretty quiet as far as news goes. Obviously, we heard what happened over the weekend, U.S. Capturing the Venezuelan president. A lot of people thought that there were going to be effects in the crude oil market in there. And crude oil did what crude did and stayed exactly the same. I saw a bunch of tweets that were just like, breaking news, crude oil is dropping after this happens. And it was like as zoomed in as you can get on a 1-minute candle. It's just like, is this what we're doing here? Is this what we have to do for likes and views? If you zoom out, crude oil has not changed prices. So could there be an effect, downstream effect somewhere later down the line? I think so. But ultimately, what we have to do is trade the prices that are in front of us, especially as day traders. Anything you got on the news, Coach Paul?
Well, I've said it before, I kind of like crude oil.
You did say it, yeah.
This helps, but it's got a lot of work to do, even though it did end up $1, but the range was pretty tight. But other than that, most of the news is coming later in the week. Looks to me was allocation for the first official day to me of the year, and they allocated. That type of news, I guess, didn't affect allocation, and we had a nice rally in the equities.
Yes, we did. So let's take a look at the quote board. We have 36 different markets we can trade with Topstep accounts, and today to the downside, there wasn't a lot down. You said allocation, and allocation a lot of times means buy something. It looks like the theme was find a market and buy it. To the downside, we had the Mexican peso down 0.02%. We had the Canadian dollar down 0.21%, and natural gas, our biggest percentage mover to the downside, down 2.96%. Those were the only 3 markets that were red on the quote board today. To the up, yeah, crazy. To the upside, we had copper up 5.2%. Platinum up 6.6%, and silver, our biggest percentage mover to the upside, up 7.48% on the day. To talk about our big 4, we already mentioned crude oil up 1.83%, the S&P up 0.63%. Gold up 2.95%, and the NASDAQ up 0.75% to round out our big four. I have a NASDAQ chart up here right now. Today is first day of the week, so why don't we take a look at the daily? What are you seeing here on the daily, Coach Paul?
An inside day, surprisingly. Inside last Friday's range. Still hanging around the 20 and 50-day moving average. They had some buying, but very weak buying and surprisingly weak volume on average. Less than Friday's selling volume, which is kind of concerning. NASDAQ to me was the weakest equity on that I saw today.
I mean, we had the Dow make all-time highs.
Flight to quality.
Maybe.
I mean, we can make a case for that, but the bottom line is NASDAQ really has to get some buying going. To me, it's a red flag on that average volume after Friday's above average selling volume.
Yep.
Not recovering the 20 and the 50-day moving average feels a bit heavy.
Yes, it does. Yes, it does. Everyone's was looking for the Santa rally. Didn't happen. It happened in the metals. Again, the Dow is making new all-time highs. And, if you're trading the equities and you're looking for a breakout market, right now it's just not the S&P or the NASDAQ, which doesn't mean that there aren't opportunities, right? They're just range-bound opportunities. So if you can identify where the extremes of that range are going to be as the market trades throughout the rest of the day, you can have some pretty good trades here, but just have to go in with reasonable expectations, right? Especially if you're looking for breakout trades. We saw Dakota take a long today during fast markets, and he said, you know what, I'm not looking for much above 25,700. I'll take the trade into 700. And I think he was risking 20 points to make about 10 to 15. But as long as you can go in with that expectation for your trade, and he's not looking for, a move back up to 26,000, then you can take some money out of the markets. But there may be other markets presenting larger opportunities. We'll have to see those. Let's take a look at the 30-minute chart from last night. It's open. Not the most urgent open from last night. It took a little while. The price left that range fairly early, but it took a little while for volume to leave that range. This VWAP here didn't leave until the London session open. It was a decent trade, right? If you were able to get in somewhere last night, it's just by the time we got to the New York session, look at the difference here, right? This first 30-minute candle from the New York session today was pretty much the range for the day. But decent trade overnight. Of course, we got that white line right here. This is our 200 moving average on the 30-minute chart, 25,615. You may have heard us talk about this during the opening call, that if price traded above the 200 moving average and volume didn't, you're looking for potential opportunities to sell. And pretty sure we said it during the opening call, the NASDAQ is not going to just stop right at this level. It's just, I mean, I think I could count on one hand, Coach Paul, the amount of times where we see the NASDAQ stop right at the level. But if you can see where the turn is later, there's a decent short. And in this case, it happened up near 25,700s. It did the same thing Friday, right? Where we're looking for what's the market's response to the 200 moving average. And I think the way we read it, Coach Paul, is the market is VWAP. Price advertised higher, but where the market is really showing its intent is where this VWAP is, and just looking for that reaction and a turn off of a major level could present a nice trade. And in this case, in the NASDAQ today, was at 25,700. Anything you want to say about this 30-minute chart here, Coach Paul?
Yeah, the VWAP is a lot closer to the 200.
Yep.
We had price buying, which, after last night's rally, we're in a neutral territory, but like I said, it's got to go. That could happen tomorrow. I'm going to keep my eye on that VWAP over the 200. What catalyst? I don't know. But once again, light volume, the heaviest volume on the day was selling, and it couldn't have follow through. So let's watch VWAP tomorrow to see where it is against the 200.
100%. Outside of that, the NASDAQ is trading prices that we've seen it trade for a long time now. Again, some pressure above this 200 moving average. Maybe we do get the rally, but buyers have some work to do if they are going to lift this market. We'll take a look really quick at the open, and I really want to just compare this to the Dow because it was two completely different markets. And this is where, we've talked about it before, but sometimes maybe you have all four equity markets up. Do I suggest trying to trade all four at the same time? No, but if I'm looking for breakout trades, I got to go to where the breakout trades are happening. And here's the Dow in this case. Let's full screen that. The Dow is on the right, the NASDAQ is on the left. Which one was cleaner? Right? And obviously, in hindsight, the Dow is cleaner, but it showed signs early that it had the potential to be cleaner. And one of those signs is something that we look at all the time. I'm going to change these charts to regular trading hours. But one of those signs is how early VWAP is leaving the range in the Dow. Right here is the 3-minute opening range in the Dow. And here it is marked out in the NASDAQ. The NASDAQ VWAP never left that range. Price did, but VWAP never did. In the Dow, which made all-time highs today, it left relatively early, right? Relatively early. And it looked like right off the open that it had the potential to. This is a huge opening range here in the Dow, so maybe you don't want to risk that much. I'm not saying that there's a trade there, but a market showing signs this way shows a lot more potential for follow-through than what the NASDAQ showed today.
Tale of two different markets.
Yeah.
And they really came after the Dow, as we can see. On that, we were talking earlier today, the NASDAQ never left, VWAP never left that opening range.
Right.
I've found that's an argument to trade, to range trade or
right.
fade the extremes. Maybe easier said than done, but it gives you information. For me, I just didn't trade the NASDAQ.
Right.
It was, it's another Rusty had buying right off the open also.
There you go. Right. So if you identify that the NASDAQ and the S&P are pretty range bound early, the trend may be somewhere else now. It's a skill in itself to go identify the market that's moving and then be able to trade it. But I think if you have an approach to trading a market, it doesn't matter what market it is, right? If you have an approach to trading a trending market, you can flip over here. And the Russell is definitely more forgiving than the NASDAQ in my experience. Took a little longer than the Dow did to leave that range, but another one that had the DNA of a market that had the potential to trend. And I think the NASDAQ and the S&P, we'll take a look at the S&P really quick. Where the S&P it tried, right? It actually left that 3-minute range. It just took all day. When these markets look like this, the money may be moving somewhere else, which might mean, like we say all the time, our job as traders is to identify opportunity and see how we can take advantage of those opportunities. The opportunity may be somewhere that you're not looking. Anything else you want to say on the equities, Coach Wall?
No, that's it. Let's see what happens tomorrow.
We shall see what happens tomorrow. I think we have a bunch of markets near that 200 moving average again on the 30-minute. Let's change this back to extended trading hours and go to a 30-minute chart here. We got the NASDAQ right below that 200 moving average, 25,615. The S&P above it and volume above it as well. Okay, so this is a little bit of a different story here in the S&P. We will see how that does play out. Courtney says, I didn't take a single trade today, always watching ES. 36 points overnight made RTH longs tricky. S&P opened on the daily higher. Tried to find a short later. Yeah, I mean, sometimes that happens, right? When the overnight range is so big, the range that we get for the New York session is just tough to trade. And that's when you can start to look at the daily ATR and things like that to see how much room there still is, but it can make it tough to trade.
I like that. You sat on your hands. You had a defined plan to trade. Didn't reach those. I mean, that's really mature trading.
It really is.
If it's not there, don't trade. You don't have to trade.
100%.
Wow.
So good stuff there.
CABX8BU finished up 18,800 on an XFA today. Great trading. Good job.
Great job.
What were you trading?
Yeah, right. That's
Let
what I
me
want to know.
guess. Gold or silver?
It had to be. It had to be. If you made $18,000 trading the NASDAQ today, you may be. I mean, you could
Over
have.
leveraged.
You could have if
Damn
you bought it
good.
last. If you bought it last night, you could have. But yeah, it had to
Silver.
be. There you go. It was silver. That makes sense. That makes sense. We'll switch over to the metals in just a second. I'm gonna do a little bit of a trade breakdown on the gold market. Gold was most of my profits for the day. I did get in long last night. Let's take a look at the daily first to start. What are you seeing on the daily here in gold, Coach Paul?
It's curling back up. We still have that large candle, selling candle with large volume. Where did we go to?
Closed above
Right
it.
around 50%. Where we kind of closed around there. Interesting.
Yeah.
Held the 20 moving average. I mean, a nice recovery. We'll see tomorrow. Still a very friendly chart.
Agreed. I think, there was a lot of attention, and I'm going to go over my trades from last night. One of the things I want to mark out, this 50% area we're talking about on the daily. Why do we mark this out? It's because we see the markets respond to those so many times. This candle that was December 29th brought us off of the all-time highs. It wasn't the candle that made the all-time high, but it's very similar to the October 21st candle that we talked about for 2 months before we broke out, which is also very similar to the April 22nd candle that it took 5 months to break out of. This one wasn't as much volume as those other two, and we're already very early closing back above 50% of it, and the 50% mark of all these candles have been an area of contention, so we'll see how the market responds. But we did close above it. So when I was trading gold last night, I had 2 targets. The first one had to be what, Coach Paul? You can see it right there on the chart.
The white line.
It had to be. The 200 moving average on the 30-minute chart. Gold gave me an opportunity to get in long, but this 200 moving average, because we see the market respond to it so often, had to be the first target. And there was a realistic probability of the market getting back up to 44.50s, right? But it had to cross that 200 moving average with some volume to do so. And here's where I think trading and analyzing the market are two different things, right? Where I can say, hey, I think the market is going to go to 44.50. And it's exactly what I said to myself last night when I got into this gold trade. And I was right. But just because I know or have an idea of where the market can go, and Coach Paul used to say this all the time, right? If you could get the newspaper for tomorrow's prices, right? If you give the newspaper with tomorrow's prices to a trader, can they make money with those prices, right? You don't get to choose how the market's going to get there. So I think that's why we have to have, reasonable expectations for what I'm looking for out of the market. But 2 reasonable targets here, right? So let me go down to a 3-minute chart. And David Mills just said it in the chat, right? To hold that is very different, right? We're talking about holding a trade for 2 hours or holding a trade for 15 hours. Now, gold was kind of a one-directional market all day, but we try to pull up these executions. One of the things we talk about is, trying to hold on. What's going on here? Here we go. All right. So took a couple gold trades. The risk on this, I was not risking more than, and I've had a decent start to the year and a decent end to last year, which is allowing me to take more size, but not risking more of a percentage of the account, right? I'm not percentage-wise. I still got Coach Paul's don't risk more than 12% of your account in any given trade in my mind. And in this case, I was long 7 gold contracts and was risking less than 5% of the account balance on this trade. But it was a high probability trade in my mind. So I'm going to go ahead and take the trade and then scalp in and out. So you'll see a bunch of executions here, but I want to talk risk management over everything. this is a completely irresponsible trade if I can't afford it to take that much size in the trade. But the idea was, I don't think that we're going to make this low, right? The first thing that I saw was a buyer come into the market. We opened with a gap up, and I took this one fairly early. Shout out to Nightbot with the risk disclosure right there. Perfect timing, Nightbot. But we saw buying coming into this market early. We have, and you guys know me, I'm not a fundamental trader, but we have the new geopolitical risk over the weekend. And I know a lot of people were looking at crude oil, but to me, a lot of times what you hear people say is in wartime, you buy physical assets, right? And that was like a quick momentary thought. That's not the full thesis for this trade, right? But we get a gap up in gold. I identified a buyer. It was about 200 contracts that traded up in this zone from 43.73 down to 43.70. Most of that was positive. So when we got a pullback and we held the gap, right, we traded into about 50% of the gap. Right, this is a 3-minute candle, but it'll probably show cleaner on a 1-minute. But we traded into 50% of the gap, and this is where I'm saying, okay, this gap is going to hold for now. I want to get in long because I know where my risk is. If we start to close this gap and make a new low here, then I'm going to be out of this trade. So I got into 2 to start, got in kind of late on that entry, but I knew where my risk was. And when we got more of a pullback, I added the rest of the contracts. And where did I say that first target had to be? It was the 200 moving average on the 30-minute chart. And you can see these scale outs here. Now, I got scaled in and out of this position a couple of times. When we came back, held this opening candle, I got back into the trade. You can see ultimately where the exits were right around that 4,400 level where that 200 moving average was. And that was it. That was the trade, right? It's something that we talk about all the time. I think, you know, what's important here to me is the risk management in the trade, where this could be a loser, but it's not going to blow my account if I lose this trade, right? What I just mentioned here for this trade is nothing different than what we talked about for the last 2 years, right? We have decent urgency, and it wasn't really urgent on the 3-minute. I took this trade a little early because of the gap up that we had, but decent urgency in the market. The target was something that we would target all the time, right? Which is that 200 moving average. And on the 30-minute, we did have volume looking like it was going to leave the range to the upside. So very simple trade. You know, the analysis of it doesn't change. And in hindsight, could I have held 7 contracts to the upper target of 44.50s? Yeah, and we would be talking about a completely different day. But as a trader, I have to manage what's in front of me right now and what I'm willing to, not just from a actual capital perspective, but from a mental capital perspective, willing to deal with. Hadn't eaten all day, took this trade, and I'm like, I know I have some, I took some chicken out of the refrigerator. I need to go make dinner, right? I need to eat at some point because it's getting late. And this is what I made, you know, decent amount of money in an hour and a half. This is what I'm willing to accept as a trader. When I wake up in the morning and I see the markets up here, I can't try to make up for what I should have had because I made a decision here, right? There's going to be a lot of people that says, oh, well, you could have held that all day. Could have. But that's not what we did. I actually made a stir fry last night. I should make some fried chicken soon, but I made a stir fry last night. But
I have a question on you. So you went early so you could leverage early.
Correct.
Is that correct?
Correct. Yeah.
And you could pair your losses in a
Correct.
short amount of time. It wasn't your plan to buy and hold for a runner.
Nope. Very, very smart man has told me 2 to 1 is great for a day trade. And I got more than 2 to 1 here.
So 2 things I would say is nice trading because you had predefined it, which you were going to scalp early on the buy side.
Correct. And yeah, correct. So you were going to say something else, Coach Ball. Go ahead.
We did get some urgency.
We did.
In a half hour. What did it look like from Shanghai?
Let's take a look at the Shanghai Open. So here's that Shanghai Open. That's on the 30-minute. We'll go down to a 3-minute. Shanghai Open, 8 p.m. Eastern time. Here is that 3-minute candle.
You can see by the volume.
Yeah, you can see it by the volume. Usually consolidated for a while.
Yeah. Now, at that point, I think gold was up $60, $70.
Correct.
with that gap.
Right.
So going into, you could have held that all day. You get more information as the day goes on, and you can't. We're looking at a chart looking backwards.
Mm-hmm.
That's not risk management.
Right.
So as the night went on, you get more information. One of the things I'll give you is just, you wanted to go early. You know, I call it go early, risk less.
Yes.
So in that manner, you weren't looking for what I would call a 3-run home run.
Right. Right.
And why I bring that up, if whatever your entry is, you have to have a predefined exit with risk management. That's not what you were trading for.
Right.
Looking back, they said, "Oh, that would have been nice. I could get held all 7 of them and sold them at the high of the day."
Yeah. Then I'm a hero.
That's called resulting.
Yes.
And that's a really bad habit. So I know I used to, when I first started, that's what I would do. I would look for those.
100%. Yeah. And is there a way to catch it? So the way, what I will say about how I managed this trade, I didn't get out above 4,400. I just trailed, right? So I got in long from down here, and this trail, this little candle right here, came in and took me out, right? So we were above 4,400. I said, okay, you know, I see some structure here. This was the candle that traded above 4,400. I'm not willing to give back a whole lot for that, right? So maybe I trailed a little too tight, and I wouldn't have gotten stopped out of this trade. But this is live with the decisions that you make. This candle wasn't going to hold, and we turned around. That had the potential to be a reversal, right? So below this candle is where I want to get out of my trade. Again, in hindsight, could I have trailed somewhere closer or further away to give it more room? That would have worked for this one example of this trade. Now, if I see that happen 100 times, then maybe I can start to make some adjustments. But this is how, you got to make some finite decisions. Maybe I could have scaled out of a couple, held one. But, you live with the results. From there, gold held above that 200 moving average on the 30-minute. We did get a nice little pullback into it. Held above, volume trading above as well. This looks pretty bullish to me.
Yeah. Did we look at the daily?
Yeah, let's take a look. So it held at held at 20.
Yeah. And can it make new highs this week? Possibly. That's pretty solid rally. Now, looking forward, we have a pop. If this does make all-time highs, it could unleash another rip-roaring rally. We would have a J trade.
Oh yeah, if we close above this high.
Yeah.
Yeah, that could be a pretty big move here. Pretty big move. Let's take a quick look at silver. Silver looking very similar to gold, closing again above, actually right at that 50% of that aggressive sell-off candle. That was a 15% high to low move in silver. We're right at 50% of it right now, 76,445 on the daily. Anything you want to mention on the daily here in silver, Coach Paul?
Yeah, it looks the same as gold.
Yep.
I mean, that's not actually looks more bullish. It's not even close to the 20
right
moving average. Consolidating, nice rally. There is nothing in there that's bearish to me.
Yeah. Agreed. Let's take a look at the 30-minute. And Courtney said in the chat, I can see holding a micro all day, but holding minis overnight all day would be difficult for me too. One of the things my trading mentor used to say was just, let's say you do, and Coach Paul, you say this all the time, units of measure, right? But I save one slice for the rally, right? That last, if I eat a whole pie of pizza and there's one slice left out overnight and I wake up and it's still on the counter and the next morning I can't eat it, okay, right? Basically, I had a trade that was so in the profit, had 7 contracts, trail with 6 and leave the one for I don't care what happens to this position, right? And leaving some skin in the game, but if it stops out for 0, then I'm not concerned, right? If I had that full trade, 7 contracts come back and stop me out, then I'm upset, right? But if I got to eat most of it and then have that one lot to run, you know, I wish we had a runner, then yeah, but no, there was no way I was going to hold that full position overnight.
Well, you could have had cold pizza.
I mean, I love cold pizza, but
I'm the odd man out. I don't.
no,
No.
I love cold pizza. It has to be in the refrigerator though. If it's just like left out on the counter, then it's lukewarm room
Yeah.
temperature, then that's weird. But if it's in the refrigerator, I will. Probably not good for you. What is?
Well,
Yes.
holy urgency.
Yeah, we had some urgency in silver for sure. And if you are a new viewer, what we mean when we say urgency is relative to the time frame that you're looking at. But we had a 30-minute candle here. In the second 30-minute candle, price was leaving the range. By the time that third 30-minute candle was printing, volume was leaving the range as well. And that was it, right? Really nice buying above that 200 moving average. VWAP crossed as well. Silver took a big hit on that liquidation day, but we're already back to 50% of that aggressive sell-off in a market that I don't know that fundamentally anything has changed. So this looks extremely bullish to me as well, Coach Paul.
Yeah, and the session VWAP closed above the 200. The highest volume of the day was late. And that's COMEX. So let's see what it looked like starting in China on Shanghai Open.
Shanghai Open, 8 p.m. Eastern Time. Here is.
Let's just look at the volume.
Yeah, it's right there. It was tough. I know Dakota was trying to trade it last night for slow markets, and I think similar to what happened with the equities on the New York session open, like most of the move happened before it, right? So now the market has to digest, and this is a long consolidation before the next move. It's 10 hours.
Yeah. Now let's look at COMEX Open.
8 o'clock or 7 Central?
Yeah. Yeah.
7 a.m. Central. Different story here. D says it all the time. Time of day is a level.
All right. So, and look at the volume, wasn't even that great.
No.
Now, I will be watching those two openings myself. So we talk, it's hard to trade silver if you don't have a small window of loss.
Yeah. Yeah.
Looking at openings, this is the COMEX opening can give you the opportunity for a small window of loss, but you have to measure it. So we have the first 3 minutes. What's the risk if I buy it? Well, to new lows. What is that? What was the range there?
The COMEX Open or last night?
COMEX Open.
This is 87 ticks, 43 cents.
87 ticks. It's not a little bit of money.
No, it's not.
On a micro, what is that? 87. Is that $5 ticks? It's 400, about $500 of risk.
Yeah. Yeah, that 1 3-minute candle with a big contract in silver is a $2,200 candle. So divide that by 5, right? About 450.
$400 or $500.
Right. Yeah.
So this, even the micro silver can be out of your budget.
I agree.
I mean, that's 3 minutes of risk. The average true range is what?
On the 3-minute, 31 cents about.
Yeah. So
anywhere from 20 to 30 cents.
That's the reality. And that's why we're talking predefined risk. It might not be a place that you can afford to trade.
Yep. And you can see it just like we were talking about with gold, right? Analyzing a market and trading a market are two completely different things. Most people can probably analyze the chart and to a high probability determine where they think it's going to go. But if you are position sizing correctly, over leveraged, that may be the issue. And I do agree, Coach Paul. Silver is getting to a point where I don't know that I want to look at it. It's like, okay, if it's going to lead the metals, I'll just trade gold because it's a lot. It's a lot of risk.
I mean, they almost have to have a nano gold, which I'm sure some exchange is going to launch a 500-ounce
silver
contract.
Yeah.
So
we got some.
It's a different game.
So, Coach Paul, do you know what the COMEX open time is for silver Central Time?
It used to be 7 o'clock. Let me double check.
Okay. 7 Central. Got it. So 8 a.m. Eastern for Van. That's if that's the right time. What's interesting though with silver is that a lot of times you can see exactly when that open is from the volume. Silver's volume just happens whenever it wants to.
Try 725.
725. So let's look at a 5-minute chart. Okay. So here's 725. There you go. It's even less volume, right? So part of the reason we look at those open is because it has a high probability of trading volume at that time. And maybe today's an anomaly. Let's look at 725 yesterday or Friday. Okay. Friday was a little different. 725. And look at the day before. So it's and this is going to change. Sometimes there's data that's coming out that the market open doesn't mean anything because the market's going to wait for the data. But 725 looks like that time if you're looking for opening range trade there.
To me, it's Globex open or Shanghai begins the day.
Yep.
By the time, I mean, the world has already gone halfway around the sun. No, around its rotation, not the sun. That's a lot of time. And commodities trade 24/7, cash market. So this 725 Central Time open is a relic. That's when all the orders used to come into the exchange, into the pit. That's no longer the case. It's fragmented. So that's why when we start looking at all of them, commodities except for grains, really Globex open or Shanghai is the beginning of the day.
Go. Maui Man says, I hit that like button. You should do it too. You know what? I haven't hit the like button. And I'm watching this on 2 different accounts right now. So let me hit the like button on both of those before we continue here. 1, there's 2. All right. We appreciate you all being here. All right, let's take a look at crude oil. Crude oil with the geopolitical news that's going on right now. Everyone was looking for, hey, crude oil is it's either gonna go to 0 or it's gonna go to 100. And if we look at crude oil on the daily, and I see we got a bunch of questions in the chat, one from Seekin and then another from Ag Trader. So we'll get to both of those as well. But crude oil, Coach Paul.
Well, it's still in the range.
Yeah.
I mean, a lot of things have to happen. We're still under the 200, but we are basing. And the range is getting tighter, and VWAP is just flattening. Excuse me. The average true range is flattening out.
Yeah.
To me, it's still limited place to trade, but it's got work to do. But I just get the feeling that This is going to be the ignored uh, commodity
Yeah, until it's not.
until it's not. But here it had a decent range. It's up a buck, $1.04 to be exact. But first thing, let's clear VWAP above the 50-day moving average. See if we can get some spark. Still limited opportunity,
Yeah,
but day to day, trade the range so far.
that's all you can do. We won't even overanalyze this. Here's that. What I would mark out maybe is this 1 minute candle, which turned out to be a 1 minute candle. It's the first 30-minute candle as well.
Well,
It
there
looked
you
like
go.
it looked like it was about to go down. I'll be honest. I took a short in crude. Actually, I took a short right around 50% of this range, and then there was no follow through. So I think I took this trade off for a scratch. Saw some big selling that came in on the open, some more selling that came in at the lows down here at 56.56, and when we got it bounced back up to 50%, I said, okay, this might present an opportunity for me to take a trade here. Not a ton of risk either, because while this looks like an aggressive candle, it's about $1 in crude. So the risk was about 40 cents. With a couple micros in crude, it's not a ton of risk, but it just turned out to just not be a great trade. So I took it off. You were gonna say, Coach Paul?
It's just interesting. You had $1 in the first minute,
Correct.
and the range of the day was what, $1.50? Let me see.
High to low range, we had $1.20, about $2, about $2 range.
$2 range.
Half that range
In
was the
1
first
minute.
right?
And this is a microcosm. Just any kind of problem. We have $1 range in a minute.
Right.
So if it becomes a real problem, that's why I can see this market just goes because all the selling is in.
Correct.
We're not there, but that's right there. I mean, there's a market that just is drifting.
Yeah.
Then we make new lows, and then what is that? On the lows.
On the lows here, this is the London session. I'm on a 1 minute chart right now. We normally don't look at these on 1 minute charts, but here we're here. Here we are. We have the highest volume outside of that insane 1 minute candle, closed above it, and we turn. And again, if you're up at 3 a.m. Eastern time, 2 a.m. Central, or you're in London or somewhere, that may be the best time to be trading crude oil. And again, like we talked about in gold, I hold for this whole trend, but they tend to get the best prices.
Yeah. Now, let's look at a 3 minute. Did we get it on the 3 minute?
Yes, we did.
Well, there was opportunity.
It was there.
That's funny. Is that a fair value gap trade? I don't know the exact reason, but it kind of looks like it comes back.
Yeah.
See that very interesting. What was that price?
$56.62 at the high, $56.32 at the low.
So I had second level of support on my pivot at 56.29.
Pretty much right there. I think the next candle, the low of the day was 56.31. So pretty close.
But looking on that, it was lower. After that dollar, that's how I would say there's a lack of liquidity for a crisis in crude.
Yeah.
But interesting. There we go. There's the classic J trade. On the lows, highest volume at that point, close above. Let's put a VWAP on that 1 minute. All right.
Nice retest of it here. But yeah, we'll see. We'll see. We have to keep an eye on crude oil. And we'll see what happens. I'm not trading it much at all. I don't know the last time I know the last time I placed crude oil trade, it was today. But that's because I thought something was going to happen. But then when it went back to, I got caught up in the hype of social media. What's oil going to do? Is it going to go limit down? Is it going to go back to negative? It didn't do any of that. Don't get caught up in the hype. All right, we're going to get to some questions here. I think we talked about all the major markets, unless Coach Paul, there is any other market that you want to talk about. But we got a question here from Ag Trader. I keep blowing up my XFAs periodically. I've been trading gold, but even with small micro positions like say 3, I'm getting death with 1,000 paper cuts resulting in blowouts. What advice do you have for me? Kind of a general question, but even trading 3 micro position in gold, getting death by 1,000 paper cuts.
You got okay. I'm real simple.
Yeah.
You got to size down.
Go.
Why? And I'm not. It seems the 1,000 paper cuts.
Mm-hmm.
If you've been trading gold well, and it's been giving you, what I should say is that if that market has been favoring your trading, you could be in a part. Most likely, you're in a part where either the volatility, and it has. What's the average daily range in gold now? Is $94.
Yep. I'm going to step away for just a quick second, but yeah, go ahead, Coach Paul. $94.
$94, and it was 70 a couple weeks ago. So the volatility regime and the swings are severe. So either you might want to stop trading gold, because when we had an example in silver on a 1-minute bar, it's $500 to $400 to $500 risk on a micro. Gold, and you just look at this, that 3-minute, those swings are vicious, and they're exacerbated by the volatility, or what I consider is the average true range. So let's just take a look at the average true range as it went from the day. We'll just take from the opening.
Last night's open or the
last night opening. That average true range was
on a 3-minute. This is $4.
Okay, and then it gets to a high, I think, of $6 or $7.
Last night it gets to about 7.5.
All right, and now that from the COMEX open.
From the COMEX open, it was about $5.
Okay.
And then rose to about 6.5.
It's $150 risk swinging on a 3-minute. That could be it. But that's why the immediate thing I know when it happens to me is like either pare down, like cut it to 1. But keep your eye on that ATR, or it might be like gold could get to that point too. It's just can't afford to trade it, especially in a choppy market. Look at that. That was in that market for about 3 hours of just going up and down.
Oh, this year?
After we made that high?
Yeah, this. I tried to short up here, and I could have taken it. 44.60 was the price that I wanted to short, and I could have taken it a bunch of times. I walked away. I can't do this.
So, number one, pare down. And if you can't pare down, or it's not, you trade something else, because like I said, the window, you got to find a window. We used to call it leaning on a bid. What I hear is leaning. You have to have a small window of risk, and when it gets volatile, you have to really pare down on your opportunities. Like I'm only going to trade the first 3 minutes because if it is choppy, it's not a death by 1,000 paper cuts. It's more like getting stabbed 50 times.
Right.
So either pare down, go to one, or maybe it's just gold is not. It's getting violent.
Yes, it is. And Ag Trader in the chat just said it. That's exactly what's happening. My stop loss is $150 and it keeps hitting my stop loss. That's your stop loss with 3 micros. You can widen your stop 3 times as much trading one. And it might feel like we're moving slower, but sometimes slow is fast. The one question I have is, and you know, that's the thing with dollar amount risk sometimes. You know, try to find structure first and then see if you can afford that structure, right? For example, scaling into this gold trade, the structure was when I took this trade, and I'm wrong if the market trades below this price. Now, once I get in with decent trade location, how much is that going to cost me? If my entry had to be up here, let's say my entry was up here, but my invalidation point is still down here, that's when it makes, you know, this trade is not worth it. Or I have to trade it with a micro, right? In order for the risk to make sense. But when I try to fit the market into my account and say I only want to lose $150, you know, the market's going to take it. The one other question I wanted to ask is to that point, how many days is it usually taking you to blow an XFA? Ag Trade, if you can answer that question in the chat. Just curious, how many days is it taking you? Because even with 1,000 paper cuts, right? We can set a daily loss limit that says I'm not going to lose X amount of my account in a day. So just curious there. And then we also had a question, 2 to 3 days. Okay, so then there you go. If you're losing your account in 2 to 3 days, whether it was 1,000 paper cuts or one big cut, you could stop the bleeding by putting in a daily loss limit. Coach Paul's suggestion is 12% of the drawdown in your account, right, to start. And if you're trading, let's say you're trading 150K combine or 150K XFA, what's 12% of $4,500, which is the drawdown in the account? That is $540. So setting a daily loss limit of $540 and then adjusting that every day. Let's say you lose, you know, Coach Ray used to say this all the time. Give yourself 10 days in that account where if I lose every single day for 10 days, what's the likelihood of that happening? Then yeah, I can chalk it up. Maybe I had a bad streak of trading. But if it's in 2 to 3 days, and trust me, I've done it before, you're just not managing the risk of the account. And not managing the account itself. And you know, you could have one trade that wipes out a majority of the account if we're not doing that. So a couple suggestions for you there. One more thing from let me see here. Daily loss limits are key, 100%.
Yeah.
100%.
Just remember, what are you managing?
An account, your money.
You're managing the balance of your account. You're not managing the market. Mm-hmm. You can't. So cutting that off, and then we see this, we've done this a long time. I've experienced it myself. The ultimate, because discipline is the destiny. And that discipline in this case is cutting off losses and protecting your account balance, your bankroll. Without that, it doesn't matter. All right. So I think you've made it. You've made money. You've gotten paid out. Now manage your account and keep that 12%. Because think of your really bad days versus your really good days.
Yeah.
Go measure that out. I won't say it more. You'll see it. It'll pop right up. And then you go take those really bad days of 50%, 70% and say, if I've cut those off to 12%.
Yeah. Change a lot. Seekin here says, I keep getting biased when we gap up and go during the overnight session and always lose an arm or a leg in the New York session. Can you share some tips on being biased in the context of overnight price action? I'm always afraid of jumping in a moving train. And when a deep pullback happens, now being biased in the context of an entire session trend, I would enter. But that deep pullback is a change of character. So let's go back to the equities, right? So you get biased when we gap up, which we did, I believe, in the equities. We pretty much gapped up everywhere, right? So the NASDAQ had a gap up. You have a bias here, right? And that bias, I'm assuming, is to the long side. But by the time you come into trade, let's say you're trading just the New York session. By the time you come into into trade, the New York session is trading here. Now your bias is to the long side, but you said you're afraid to get into a moving train. When a deep pullback happens, I would enter, but that pullback is usually a change of character. So what I would say is, you know, for me personally, and we talk about this a lot during the opening call, depending on the size of this overnight inventory, if it's 70% of a daily ATR, I probably don't trade this market. Just going to be honest. Could it continue to trade? It could, but let's take a look here, right? The overnight high before the New York session open is right here. What price is that? 25,647. The low is, why did you just do that? Okay. 25,647 to 25,406. That's 240 points, right? The daily ATR in the NASDAQ is 340 points. So if I do 240 divided by 340, 70% of the daily ATR range was spent in the overnight session. So unless there's a catalyst that has the potential to increase that range and have an outlier day, I'm probably just not going to touch that market, because if we did 240 out of 340, there's 100 points left somewhere, right? Now, that means that we would have to extend this high, either extend this high by 100 points or extend the low by 100 points. Now, look at where we are. If we were to extend the low and get to an at range day, we would have to sell off the 240 points that we were already up. We'd have to sell off and then continue to extend through the low to get to average daily range, right? At the high, we need to extend this high by 100 points. And to me, with no catalyst, right? We know all of the heavier economic data that have the potential to get the markets moving. Of course, anything can be a catalyst, right? Somebody could say something on a microphone, but as far as planned catalyst goes, they're all later in the week. So what is the likelihood that today is going to be an above range day? That's where my mind goes. Let's say the overnight session was still long, but it was a 50-point range. Now, 340 minus 50, there's 290 points available for us to get to an at range day. Now I can see which way the market is going to try to exhaust that range, right? But when it's up here, kind of maybe lean a little bit more to the long side just because we're up here, but it's tough, and you can see that, right? So one of the things, if you're looking to get in, here's view up, right? If you're looking to get into that trend, we get a pullback to view up, and what I'm very conscious of is, if I'm going to trade this, I don't want to be the one buying the high, right? How many points are there left to the upside? There's 100. There's no catalyst. I can't make the market move 100 points, right? So I need to come back to somebody who has the potential to do that. That's view up. Maybe that's where your long goes. But I'm curious, Coach Paul, what would you say on this?
Well, first of all, my first thought was, you're noticing this.
Yes.
Those gaps.
Yep.
So if we let's just take and go regular trading hours, because you'll see the gap. All right. Now, okay, there is the gap. Now we could use, someone talked about a fib retracement.
Yep.
Let's do a fib on the gap. Well, you have 50% right there. Let's do all the traditional. Now,
That's technically a 618 from the, right? Go ahead, Coach Paul.
yeah,
Yeah.
what we first don't know is we don't know this is going to happen. We have fragmented information, but we have that gap, which let me tell you, if you're having trouble trading that when there's a gap, don't trade.
Mm.
Because it's harder to define an opportunity. I don't know what your trading plan is, but the fact that you're asking that tells me you have trouble with it. My answer is, okay, it's gapped. It's whatever percentage gap that is. It's not an opportunity for my style. It's like we talked earlier in the show. You know, some of the best trades are not trade when you don't trade. That's where the discipline comes from. Because you have to define an edge, an opportunity, and an edge. And one of the things our first thought is, okay, how am I going to finagle this to get it? And that is usually not the answer. Sometimes it's easy. It's like, wow, that gap, it's too thick of a gap. My trading, and I'm with you.
Yeah.
I don't, it's kind of squirrely. Like you've already got 75% of the average range. There's a huge gap. You're not good at gaps. You notice you're losing money in gaps. I think the easiest answer is not a day for me.
Yeah.
Go do something else.
Yeah.
Because if you feel you have to make money every day, you're screwed.
Yep. 100%.
You're going to force yourself into random trades. So one of the things, clearly define what your edge is, your plan. And my immediate gut reaction is, because you're asking a question, don't trade gaps.
Yeah. And Seekin just said, wow, if you remove the overnight price action, I wouldn't have gotten long. I mean, that honestly, that's one of the most underrated chart features. If you're only going to trade the New York session, why does it matter what happened overnight? You can see the gap. Right. And then the question is, do we try to fill this gap or not? And if you pull the fibs, shout out to all of our fib traders here who said it, JK, there's a 618 retracement of the fib, and we go. So there's something to that.
Also, go ahead. Put that put VWAP in there.
Oh yeah.
In the opening.
Oh yeah.
It never left the range.
It never left the range. It didn't do much.
So it's balanced. And it's just where you're getting caught, where you as a trader can get caught in randomness. Because if we would just removed all those other candles after the opening and just looked at VWAP.
Yeah. Nothing happened.
It held the gap. And there.
Yeah. You know, Coach Paul and I, every once in a while, we'll trade together in the morning. One of the things we both said today was, are we trying to fabricate a trade here? Are we trying to make something up? Or is something actually happening? And I think being able to ask that question, shout out to Coach Paul being my trading buddy, but even if you can ask that question to yourself, right? Is the market actually saying it's doing something, or am I trying to convince myself that the market is saying it's doing something? And those are two completely different things. And I think one, having a strategy for something that you're looking for is extremely important. But, you know, I like to think about, like, when I go review these trades, when I go review the market, when we do at the buzzer, is something actually happening here, or am I trying to make up something? And in the case that you're trying to make up something, if you have to ask, maybe if you really got to convince yourself, it's probably not there.
Yeah, Darnell Price says it's almost like candles are just noise. Well, I would say I wouldn't. Not all candles are noise, but you have, as a trader, and this is where we come into an edge. You have to be able to discern signal versus noise. For us, our signal is a VWAP leaving the range early, which we've termed as urgency. That if it doesn't do it early, I'm done. I'm not looking for anything there. So yeah, that's where you want to get to, is discerning noise and signal.
Alien Spiritual Awakening says, Jay, are you a profitable constant trader? Depends when you ask. Last year, was I profitable last year? No. Do I have years where I was profitable? Yes. Am I profitable right now for this year, for 2026? Yes. Am I profitable when I consistently trade my strategy? Yes. If I do other things outside of that, no. And that should be the answer for anybody, right? Anyone who tells you they're consistently profitable all the time, ask them whether or not they trade a strategy the same way every single day. If they don't, might be lying to you. But yeah, I've had definitely had years where I've done very well. Last year was not one of those years, not being focused. So this year, my goal is not to be profitable this year. That's a byproduct. Money's a byproduct. I don't. So that is not my goal. Go ahead, Coach Paul.
I've had great years and bad years, decent years. The key is survival.
Right.
So I was just listening to the book When Genius Failed. It was a story of long-term capital management. And some of the brightest minds in the academic and in the trading world combined. And they were like gods.
Yeah.
And they couldn't fail. I got to a point where they really believed they wouldn't fail.
Yeah.
And they almost dragged down the world economy with them. And why I bring that up, you cannot control whether your year is going to be profitable or unprofitable.
Right.
It might be a shitty year. Like I remember, I started out when I finally got the soybeans, started trading. There was like 2-cent ranges, $100 range for the day. It was horrible.
Yeah.
No matter how good you were. So, but what you can control is your losses. You can control your entries and exits. In other words, you have to know if you have an edge. And you have to develop that edge and execute that edge. Some days, some years will be spectacular. Some will be average. Some will be bad, but they can't be spectacularly bad. This is not, you don't get paid for being here.
And if you do, my suggestion is take the money out and do something else with it. Right?
So,
yeah. You can convince yourself that you're profitable, and then one slip up. We make the comparison to athletes all the time. The one thing that people, to me, neglect to mention with athletes is their shelf life. And maybe it's a little bit longer because we're not physically taxing our bodies here. But when I have a good streak of trading, blessed and thankful for it, and I take the money and I go do something else with it. Just like an athlete should.
Great question here.
Yeah, go ahead.
Sleepy Mocha. How do you know if you have an edge or we're just lucky at a given short period of time? You don't. In a short period of time. Now, that can be a very relative statement. 1 week is a tiny bit of time.
Yes, it is.
I would say 100 days minimum for day trading.
100%.
That's 3 months of trading.
Yeah, that's a good metric there. Good metric there. Friend Alien again says, so what you're saying is that the strategy must be purely mechanical? No. What do you guys think? Because if people are not trading the same style of trades, then there is intuition taking place. I think with what we're doing here in day trading, and I just said it to you in the chat, but discretion can be mechanical, right? I'm using my discretion based on something measured, right? We don't, and the reason I think it can't be purely mechanical is because I don't get to control what type of market I get that day. Where we made the analogy last week of if I'm an athlete, my goal is to win the game. I don't know what kind of game we're going to have, right? But when the game starts, my goal is to win the game. So I have to do what it takes to win that game. I have to have a playbook on a shorter time frame to execute in that game. If I am strictly mechanical and I say I only trade the NASDAQ with a 5-point stop loss, then I won't be trading the NASDAQ very long. Because it's going to take all my money. So I think what everybody does for day trading, whether you look at a 30-minute chart or whatever it is, you're a scalper, you're a discretionary trader with maybe a mechanical approach to it. What would you say to that, Coach Paul? You might have a completely different.
No, it's a really good question.
Mm.
And I'm working with Peter Stottlemyre. He claimed he was dead set that trading is not mechanical.
Mm.
That's not to say you can't trade with a plan.
Yeah.
Being mechanical is the beginning of the day, and we see this when in our reviews, whether it's the Globex Open or the New York Open for equities. You get at the beginning of the day, you get the least amount of information. All right. As it goes on, you get more information. You can make better decisions. All right. It's less fragmented. But with that, you have to have discipline. Because one of the things early in trading, we want to trade like a beast. I got to make money now. Oh, look, that looks good. The trick is, oh, look at that. It looks good. I'm going to put 5 on.
Mm. Yeah.
Okay. That's not trading. But under that, you could say, okay, that's good. It fits what I'm looking for. I have to make a reasonable risk trade. I've got information, and you can't go, well, it's a loser. I can't take the loser. It has to be a winner. So that mechanical part is defining an edge is not purely mechanical. But when you have that edge, you have to make those trades. So sometimes, you get information as the day goes. Not sometimes, you're always getting more information. Developing your trading style comes from observation, not mechanical. So that's why most traders say it's an art, not a science.
Yep.
I just mentioned long-term capital management.
Yeah.
That was science, pure science. Yeah. There is some art to it.
There you go. I think, great conversation here. And again, somebody said not profitable. How do we survive if no profits? The goal is to be profitable. The plan is not to be profitable. Right? I could sit down and say, my plan is to be profitable today. Right? If that's it, how the hell do you plan on getting there? So the plan is to execute trades that to a high probability present profitable trades. Do those over the course of a year, over the course of your trading career, and then you measure from there. But thank you, everybody, for joining Coach Paul. little over time today, but a good conversation as always. Coach Hoop is doing his class in Discord, 6 p.m. Eastern time. Then we have Coach Ray and Coach Vince, 7 p.m. and 8 p.m. I'll be back on with slow markets tonight with Dakota at 8:30 Eastern. Then we have Aaron with the London Open, 2:30 Eastern time, and D with the Euro Trade, 4:30 Eastern. Back for the opening call tomorrow. If you haven't done so already, hit that thumbs up button. We appreciate you all being here. See you all tomorrow.
See you tomorrow.
Bye.
Bye.